Hi ladies and gentlemen, today we are breaking down Brisbane's Go1 becoming Australia's newest unicorn with a mega raise. Here we go, let's dive into the details. Okay, so this is an article by the Financial Review and it's written by Paul Smith, who's a technology editor. Now, there's so many things that I love about this article that I think can really help you as a founder or even as an investor that's watching this understand the kind of things that investors are looking for when they're looking to discover an opportunity, but also how to communicate that opportunity to other investors. Now, of course, Go1's been an incredible success story in a very short period of time for the Australian ecosystem, but there's some really great elements and clues that that allow you to understand how you can position your own opportunity going forward. Okay, so let's break down the details. Now, I've highlighted some of the key areas for this. So Go1's Brisbane-based online corporate training marketplace, founded by 4 former high school friends in 2015. So what's nice about that is it gives the context of the story and of the relationship to start with. Now, they've just closed one of the biggest local funding rounds, raising $200 million in a deal that values it as a so-called unicorn at greater than $1 billion. The investment size is second only to a $250 million investment in Campaign Monitor back in 2014 and was led by SoftBank from its enormous $30 billion vision fund. Now, in this element now, it's talking about how it was led by SoftBank, but also they had follow-on investment from Airtree and also Salesforce Ventures. So straight off the bat, the brand name investors that they're talking about are some of the biggest, both globally and also in Australia as well. Now, other investors, this is what I find really interesting, where it goes and breaks down other investors that have also participated in the round were, all very well. I won't go through all of them because there's quite a few, but you can see how they're breaking down all the different investors that have gone in, which alludes to the potential size of the opportunity. So from an investor's perspective, they can see, everyone's actually piling into this company. This is a beautiful example of what we've talked about in some of our education videos, talked about the bandwagon effect, where they've just got such growth and such momentum. And also you can see that they've got a nice international portfolio of potential investors coming into the round. Okay, so I'm going to scroll down here. I do like this part where they're talking about all the recent success stories, because it's a really nice thing that, the old saying, a rising tide lifts all boats. It's a great analogy, but basically this one paragraph is highlighting the success of the local tech scene in Australia, and I think is a great reference for anyone sort of communicating the opportunities in Australia outside of Australia. Okay, now what I love about this is my favorite paragraph in the entire article. We didn't necessarily set out to do a large capital raise, but it had been a very different experience. Back in 2015-16, we had to speak to 100 different investors to get one person to say yes, but we are now very fortunate in that we have a lot of inbound interest. So when I communicate this and I do workshops and I do education on this area, I deal with a lot of founders that are in that sort of mindset where they're in that sort of early stages and people should just be throwing money at me. And it's not how it works. And this is what we always try and communicate. You have to do the numbers. You have to have the conversations with investors. You have to have those. In this, he highlights that he would have to have 100 conversations to get one investor on board. Right now, in some of the metrics that we've seen, you can have, it can be basically 1 in 10 in dealing with high net worth. But it's very common when you're dealing with sort of larger investors that is a normal experience they would have. And then he goes on to say, when we saw the opportunity to do a larger round, we took into consideration what we see the market potential as being massive and still believe that we're very early days. Now, from an investor's perspective, that's a beautiful thing for them to see. This company has had incredibly high growth that's got, and it goes down below, talk about how much of their revenue is outside of Australia, but they still feel they're in their early stages. Right now, the next part talks about how it's acting as a marketplace for online learning providers to deliver their courses to audience of more than 3.5 million learners across 1,600 customer organizations worldwide. So this is demonstrating their traction, right, of their actual offering. And you can see it doesn't matter the size of the company, whether you're super small or you're in a growth trajectory or you've got or you just become a unicorn like Go1, communicating traction is always important for investors to understand. And as an investor, you want to know what the traction metrics of a company are, right? And it says the company has benefited from the broader trend towards online delivery of products and services during the COVID-19 pandemic. Now, this is a big trend that we've obviously seen over the last 18 months, where companies that have benefited from COVID have typically been the ones to be able to access the most capital or have capital opportunities be made available to them, or had an easier time actually raising money. And then he goes on to highlight, and I missed highlighting this myself, that the industry, the online training industry, is growing a rate of 18 to 20% year on year prior to the virus striking. So he's effectively highlighting, we talk about this, the sector trend is in a growth sector trend, but he's also communicating that as well, right? So also saying a rising tide lifts all boats, as I mentioned a bit earlier, same with the sector that they're actually in. Now, what it does, it then also, coming down here, he then goes to highlight some of the customers that they have. Now, they've mentioned 3 airline customers, interesting enough. Now, I'm sure they've got plenty of different corporate and blue chip partners that they could mention, but for this one, they've decided to mention 3 airlines. But once again, they're all blue chip. Now, this next paragraph is also, I think, quite interesting, is more than 70% of Go1's new revenue is now generated from markets outside of Australia, and a large part of the new funding will be targeted at growth plans, right, such as hiring globally and sealing partnerships with new content providers. So effectively said, this is the important thing for them, is they've now got international investment groups coming in or leading the round like SoftBank, because they're now targeting a much bigger picture and targeting a global audience. Right, and they do highlight that 70% of their new revenue is from overseas markets. And then from, once again, going back to the traction metrics, our user base grew 300% year over year last year, with new contracts with the Malaysian and Singaporean governments helping it further establish itself recently. So in this one paragraph, or in this one sentence, they've highlighted their traction metrics, their growth rates, but also they've put in some other trust and confidence indicators in that they've got government clients as actually part of that, talking about the Malaysian and Singaporean government. That is actually powerful to add to that. So there's some of the key elements we've seen. And obviously down here, it talks about some quotes from Airtree Ventures partners and so forth. And then it talks about how they're the clear leader in actual global transformational learning. So they're still positioning themselves. And then also just sort of gives their highlight of actually sort of working with the company. And so for me, I said, I love about this thing, there's so many different things, how it sort of talks about the success of the actual industry, it gives examples, it provides traction metrics. But the big thing is, I think this is, it always serves as a reminder for us as founders, is that whenever we see stories like this, we look at these guys and think, oh, they're so lucky. And Craig's actually in this talking about himself, how it's it's big and scary as well for him as going through the international growth. But I just love, this is my favorite line where he says, back in 2015, 16, we had to speak to 100 different investors to get one person that said yes. Some of you, this is absolutely going to be your experience, right? As I said, people have this myth that capital raising is super easy, and also it takes a very short period of time. It is just an absolute myth. Right now, these guys are in the story where I said they're raising, where they've got a growth rate of 300% year on year. They've got blue chip customers coming out. They've got brand name international investors. Therefore, they have inbound inquiries. That is rare air for most companies, where they've got that sort of inbound inquiry from investors coming into their business. Like, you're talking the top 1% of companies, probably even less than that experience that, right? So I said, understand that everyone goes through this tough journey in these early stages of raising capital. But I said, when you read stories like this and you see what they're delivering, you see how it's communicated, I said, it provides you with some things that you can look for in whether it be as an investor looking for opportunities to invest into, or whether it be as a founder looking to how to position your business. This is a great article and example. I hope you enjoyed this capital raising breakdown of Go1 becoming a unicorn with a round led by SoftBank.